afternoon and welcome to the show. As we speak, there's a sharp rally on the Nifty, 100 points, all the frontline indices at the high point of the day. I'm Mangla Malu. With me is Sumaira Abidi. We'll go to her in just a bit, but we'll talk about the banking space first. The industry is recouping from lower deposit growth. Bandhan Bank continues to make branch expansion. The bank has opened two branches and another 6 are in the pipeline by the end of this month. We have Chandrasekhar Ghosh, the MD and CEO of Bandhan Bank, joining us now. Mr. Ghosh, thank you so much for joining us. Before we talk about the business, if you could tell us what is coming in from the increase in ticket sizes, or is there any new room left for some penetration or new customer acquisition in West Bengal?
If you see that at the total industry level, growth of the credit in microcredit sector, it is in both new customer acquisition and also the ticket size. Because of the Indian economy is growing in the 7% and 5% inflation, it is coming to 2 to 5% like on that. So in that sense, the ticket size is a chance of the growth because people demand is coming. Second, the ticket size is coming a little bit upward because sometimes now earlier it was in some restriction on that. That is, they can be go to this the 2 MFI or 1 bank, then the 3 entity taken loan. But now if our customers are more matured, they are like to understand very clear from the banking industry. So they are now close maybe to the another MFI loan or bank loan and going to this from 3 to 1, then also chance to increase the ticket sizes more. But number of the new customer, that is a very big untapped, so which also can be like to cater, and then accordingly industry grow.
Right, Mr. Ghosh, that's as far as West Bengal is concerned. If you could tell us how the expansion is in the other states working, in which sector is the growth and what is the asset quality like in those newer states?
We have not newly entered any states on that. If you see that we are now as a microcredit portfolio is a 29 states and union territory. So we are recently in the last year entered in a south. Other than south, all states we are covered in the earlier on that. So portfolio quality wise, we are see that there is no big difference between the state to state. And some of the natural calamities sometimes will become, and that time maybe the quality some down, and after the few weeks it is come as a normal of that. So we are not feeling in that the state to state vary on the portfolio quality and growth.
All right, hang in there, Mr. Ghosh. You know, before we go across with our discussion, just an eye out on the markets. The Nifty Bank has surged to a record high right now, 30,400 thereabouts is where we're trading, close to around 400 points seen there. A lot of stocks there moving higher. We have IDBI Bank as well. While the frontliners are doing fairly well, the likes of SBI, ICICI Bank, a sharp sudden surge seen on IDBI Bank. There you have it, a near 5.5% gain seen out there. Majority of that coming by in just the last 5-6 minutes. It is expiry day and looks like so far the momentum has continued with the bulls. This series so far, the Nifty has gained 750 points, while the Nifty Bank has gained about 3,400 points or 12-13%. So we'll keep an eye out on the markets. But let's go back to our discussion with Mr. Ghosh. Sir, if you could tell us what exactly is the update on the merger with Group Finance. Could you give us a timeline as to when it could be completed?
So it is a good point on that. You know that we are already received the approval from Reserve Bank of India. So we are now waiting for the SEBI approval. After that will be submitted to our application to NCLT, and so Competition Commission also we are waiting. But after the complete of the NCLT and the Competition Commission, we will be like to able to finally done the merger.
All right, and which geography is facing huge competition or heated competition in the MFI space?
If you see that in as per data shows that in our country 60,000 rupees income household to 2 lakhs rupees income household it is an 168 million family. As of now, there is a 77 million household reached by the all MFI bank together. If I see that in the 20% of these people are overlapping, then maybe the 62 million family they have been reached, and minus with a 168, that means 106 million family till now eligible to get the microcredit loan. So in that sense, the growth is coming to this this is the new customer. So 20% if it is come on that and cover this number of family, is a long time taken on that. So there is no that much of the competition point of view about that the microcredit sector. Only see that we will like to how we can be attract the new customer who are not yet getting this the microcredit service. So MFI will be like to do on that way. So then it will be better on that the competition is not that much is needed for this industry.
Fair point there. So you're awaiting SEBI's approval coming in for the completion of merger with Group Finance. Let's talk about another thing. What exactly is the plan for reducing the shareholding further to reach the regulatory requirements, sir?
No, if you see that we are Gruho acquired, so it will be helped us to reduce from 82% to 61% in the promoter stake, what is the NOFHE. And we have the good plan we have been prepared, and according to second plan we will be like to maintain on that how we can be quick compliance with the Reserve Bank of India to maintain the 40%. So we are not like to give the specific share to you, but we are very close with that plan to compliance with the Reserve Bank of India to dilution in a 40% very shortly.
All right, Mr. Ghosh, thanks a lot for that. That's the management of Bandhan Bank. The stock is at the high point of the day, but such is the market. We're seeing big moves coming by, and now arriving to the party, we have the likes of HPCL and BPCL, the oil marketing companies, which have had a great run so far this month. About 24% gain seen on both HPCL as well as BPCL at the high point of the day. Some cool-off seen in crude overnight. Along with that, we have, can't take your eyes off the Nifty Bank, of course. So HDFC Bank, which is the strongest component on both the Nifty Bank as well as the Nifty, is currently at the high point of the day, also at the record high along with the Nifty Bank, just a few 100 points away, 200 points away from the record high for the Nifty.
This afternoon is Harsh Roongta of harshroongta.com, who joins in to answer all the mutual fund queries that have been coming in. Hi Harsh, good afternoon to you, and thanks very much for joining in. Our first query comes to us from Chandrasekhar Hegde, who's written to us. He's actually sent us a mail. He says he's a medium risk investor. His time horizon is 15 years and the goal is to save for retirement. Now, the quantum itself has not been specified, but where he's investing is the UTI Value Opportunities Fund, the Birla Sun Life Frontline Equity, and the SBI Dynamic Bond Fund, each between 2,000 to 3,000 odd rupees. Now, he wants to know whether his portfolio is on the right track. So, one thing good is that, you know, I mean, normally, even with small investable surplus, people tend to choose too many funds. So, in that sense, Chandrasekhar has chosen only 3 funds. But are those 3 funds working for him?
So, I think like anybody else, first is what will these funds give him? He's not given a goal value. But, I mean, he's making about 7,000 rupees worth of investments. And if these are compounded at 11% for the next 15 years, which is when he says he would need to save for retirement, that would give him about 4,500 per month in terms of a retirement kitty. In terms of today's money adjusted for inflation for 25 years post these 15 years, right? Whether that is sufficient or not is something Mr. Chandrasekhar Hegde has to look out. The main thing is, even these 3 funds, I would say drop it to 2. Okay, and preferably do either, an index fund for a large cap. I mean, instead of the large cap that he has, in the same fund house, he could do a Birla Sun Life Index fund. And on the, instead of doing a pure bond fund, since it is such a long duration, he could probably look at a dynamic asset allocation fund, something like the SBI dynamic asset allocation fund, where he will always typically, unless the markets are very low, he will typically get some kind of debt exposure. I think that should suit his risk profile and obviously help him go towards his goal.
All right, Chandrasekhar, I hope that advice works well for you. Do assign a monetary value to your goal so that you'll know whether or not you're meeting it or you're falling short, and if so, then by how much. Up next, Kanishk Bhalla is on the line with us from New Delhi. Hi, Kanishk. Good afternoon. How can we help you? Go ahead, Kanishk.
Yeah, hello.
Hi, we can hear you. Go ahead.
Yeah. I'm 34 years old. Currently, I have an SIP in active long-term equity fund growth. That is 7,000 per month. Then I have another SIP in Franklin India Equity Fund. That is 2,500. And then HDFC Mid-Cap Opportunity Fund, 2,500. Kotak Emerging Equity Scheme, 10,000 per month. Kotak Standard Multi-Cap Fund Regular Plan, 2,500. L&T Infrastructure Growth, 2,500. And one Mirai Asset Equity Opportunity Fund Regular Plan, that is 5,000. And one Reliance Banking Fund, 5,000. And Reliance Power and Infra, 5,000.
Okay.
So my just wanted to ask whether I have over-diversified or is it okay, or whether should I be pruning some of these funds. My aim is to have an corpus of around 1 to 1.5 crores after 15 to 20 years for my child's higher education, and 1.5 to 2 crores for my retirement corpus.
Okay, what is the total amount you're investing per month? Sorry, I missed that.
See, it is around 35 to 40,000 per month.
Okay. So, Harsh, you've heard his funds. He's investing between 35 to 40,000. He has the Axis long-term, Franklin India long-term, Kotak Emerging, Kotak Multi-Cap. He has one of the LIC schemes. I missed that. I think Infra, if I'm not mistaken, Mirai Equity Opportunities, Reliance Power and Infra, and I think 2 more, which I couldn't type out fast enough. So it's a total of about 9 funds into which he's putting in 40,000 odd. He has 2 goals clearly specified. In 15 to 20 years for his child's education, he needs about 1 to 1.5 crores. The next goal is retirement, for which he needs 1.5 to 2 crores. Now, how do these funds look to you? And also the 2 sectoral funds, I think both of them are tilted towards infra and power. I mean, both spaces that I think should worry retail investors.
Yes, so I think 3 bits of advice for Kanishk and maybe other viewers watching this. You don't need a portfolio of 8, 9 kind of funds. I think at most 1 fund per goal, maybe 2 at most, okay? He has 2 goals, so at most you're talking of, really speaking, 4 funds. So I think his question was, are you over-diversified, Kanishk? Yes, you are hugely over-diversified. The issue with over-diversification is eventually some schemes will do well, some won't. You will eventually get an index return, but at a much higher cost. You're much better off buying the index at a lower cost. I mean, it's as simple as that. In fact, the advice also is, please, the second bit of advice is, please quantify your goals. You've come up with these value of 1.5, 2 crores. What does that mean in terms of today? So if for your child, you're talking 1 crore after 15 years, the value today is roughly about 40 lakhs. I think maybe you will be better able to appreciate when you think of it in today's terms. Is that 40 lakhs enough? If it is, then probably I think you have estimated right. Retirement is a little more tricky, but you need to do that exercise. Take help from a professional advisor, or there are many calculators available. Please take their help. Third, for the pruning, I think for every goal, stick to 1 equity fund or maybe even a balanced advantage kind of a fund. On equity, especially for people who don't want to invest in too many funds, clearly 1 large cap fund, the primary fund should be a large cap fund. And today for large cap, I would unhesitatingly recommend index funds. So whichever fund house you like, I mean, look at their Nifty fund, look at their Nifty Next 50 fund if they have one, and invest there on a regular basis in the direct growth option.
Okay, Kanish, does that work for you?
If I could just ask one small
Sure,
thing.
go ahead.
Yeah, I had 3.5 to 4 lakh in my FD, and I wanted to use it as an emergency fund. Can I use it in a debt mutual fund instead of keeping the amount in FD, a debt mutual fund or a liquid fund, or that FD is the appropriate place to park my fund?
Okay, so I think normally people would say liquid fund, but I don't know, in the recent news flow, what would you advise?
No, so liquid fund is good. I'm not sure what is your tax rate, Kanishk, but I'm assuming given the amount of investments you're making, you must be among the higher tax brackets. If you're among the higher tax bracket, you can consider an arbitrage fund. I think that gives you about roughly, the direct option would give you a return of around 6 to 6.25%. That will vary, of course, there is no guarantee, but that's post-tax. So that, I think that is the biggest advantage. So one thing you could consider instead of a liquid fund is a direct dividend dividend reinvestment option in an arbitrage fund to park your contingency money.
And any recommendations there?
I think you can pick up any of the larger ones, the ICICI Equity, Pru Equity Arbitrage Fund, the Kotak Equity Arbitrage Fund, the third is the SBI Arbitrage Opportunities Fund. I mean, look for arbitrage for the fund house, the names.
Okay, so they're pretty much at par, the bigger ones at least. All right, Kanishk, all the very best. Thanks for calling. Up next, Sita Kusu is on the line with us from Andhra Pradesh. Hi, Sita. Good afternoon. What kind of advice are you looking for?
Hi, sir.
Hello.
I am the new investor. And I want to spend amount 5,000 rupees per month for my 2 children. I am the long-time investor, 15 to 20 years. Please suggest any 2 best ones.
Okay. So one thing good is that you're not asking for, just too many funds advice. You're clearly needing it for your kids' education. Any idea how much money you would need to collect? Sita, can you hear me?
Sorry.
How much money would you need to collect at the end of, your 20 years?
1 crore.
Okay. So Harsh, here's someone who just wants to get started. 5,000 rupees a month, 20 years, 1 crore is the goal.
So my again the answer to her is that please spend some time in getting that amount right, because I think that 1 crore after 20 years is equivalent to roughly 30 lakhs today. Is that sufficient? Then it is good. If it is not, then you need to rework it. Good thing is you're looking at doing it on a systematic basis. I would suggest don't put it in 2 funds. Your amount is too small. Put it into a pure equity fund for the long term. Do not get perturbed. You are going to see periods where your capital will be negative. It will be below the amount that you have invested, maybe for extended periods of time. But believe me, after 7, 8, 9 years, that amount will really give you good returns. Put it in an index fund. Again, the fund house of your choice. You can put it in the ICICI Pru Nifty Next index fund. That takes away, it is a low-cost fund. The equity risk is there, but there is no fund manager risk in an index fund.